Alright, so today we are going to discuss how do we write up combined expenses account from the chapter other payables and receivables. Okay, so before we know combined expenses account, we need to be very clear with expense account. Okay, in expenses account, if there is an opening prepaid, we write it on the debit side. If there is an opening owing, we write it on the credit side. If there is a closing owing, we write it on the debit side, whereas if there is a closing prepaid, we write it on the credit side. Here we do the totaling and balancing, right? So till here it is clear, I hope. So combined expenses account, what happens, sometimes certain business may maintain one single account for certain expenses that are related, for example rent as well as rates, right? So instead of maintaining two account, debt details folio amount, debt details folio amount, right, the business may combine these two and write down it simply as rent and rates account. Okay, so both of these are expenses, and since we are clubbing both of them, yes, we are writing it under one head, that is rent and rates account. Okay, so let us quickly read the question what is given to us. See, so Mary's financial year ends on 31st of March. She maintains a combined account for rent and rates. So there are two expenses, rent and rates. On 1st April 2008, Mary had prepaid 1 month's rate. Mind you, this is the amount of rate that is prepaid, okay? And has owed 2 months rent. This is the amount of rent that is owed at the beginning, that is $1,000. During the year ended 31st March 2009, Mary made the following payments. So these are the payments that has been made. We need to write up the rent and rates account in Mary's nominal ledger. So here this is the question that is given to us, right? Sorry, this portion. So we need to write up rent and rates account for her nominal ledger. See, so the year ended is 31st March 2009, and here we are given on 1st April 2008. That means this is our opening balance that is given to us. Okay, let us write up the financial year once. So say this is 2008 April 1. Yes, so this is April, this will be May, this is going to be June, this is going to be July, thereafter August, then September, then October, then November, then December, January, February, and then finally March 2009, March 31st. So this is what which is given to us. Okay, 2009 March 31st. So you can see the diagram here, it is given. This is our financial year from 1st April to 31st March 2009, the same thing that I have drawn here. Okay, all right, so let's see next. Suppose there had been two accounts, one is rent and another is rate. Suppose, okay, this is our rent account, okay, and this is our rates account. Had it been maintained separately, then how would we write, right? This is our rates account. See, on 1st April 2008, Mary had prepaid 1 month's rate. Yes, here we are talking about rate, prepaid. So you know P O O N P, closing ones, right? So this is our opening. Here we write down on 1st April 2008. Yes, is it prepaid? Yes, it is prepaid. Sorry, so it will be on the debit side. Here we write down April 1, 2008. Here we write down balance brought down. What is the amount of rates? It is $300. Okay, very rough diagram of rates account, $300. Next, and had owed 2 months rent, $1,000. So same thing goes here, P owing and prepaid. So here it is owed. So here we write down April 1, which year? 2008. Balance brought down. What is the amount? $1,000 for 2 months. Then for 1 month it is going to be $500, right? So here it is. So read the question again, and if there is any anomaly, just look into it. It says that prepaid 1 month's rate $300, prepaid 1 month's rate $300, and has owed 2 months rent $1,000, and owed 2 months rent $1,000. So two of the amounts had been placed successfully. Now, so 2008 1st May, we have rent for 8 months to 30 September 2008. Amount is how much? $4,000. So it is rent, yes. So under rent we write down what is the date. It is May 1, 2008. We simply write down bank, since it has been paid as how much? $4,000. Okay, it has been paid for how many? $4,000. See, it is given to 30 September, right? To which month? To 30th of September. Now you see, in case of rent, okay, I'm keeping it red color, say rent. Okay, so 2 months rent was already here owing to us. Yes, we owe 2 months rent. That means 2008 का March was pending, as well as February was also pending. We have not paid it, right? Read the sentence very carefully. Rent for how many months? 8 months. So first month, second month, third month is April, fourth month May, June 5th, July 6th, August 7th, and then September. How many months? It is going to be 8 months. That means till how much it is paid? It has been paid till September, as per the given question, $4,000. Is it clear? Okay, see if there is any more entry relating to rent. We have here 1 June 2008 rates for 13 months. We'll look into it, but let's complete rent at first. Okay, so this is 1st December rent for how many months? 5 months. So write down here what we are going to write. On December 1, 2008, December 1, again rent has been paid for 5 months until 28 February 2009. Amount is 2500. So simply write 2500. Now you see, rent is paid for how many months? 5 months. Till when? Till 28th of February. So you write down here, you see again here, for how many months? 5 months. It has been paid in when? It has been paid in December, but first month, second month, third month, fourth month, and then fifth month. That means it has been paid till where? February. But has our accounting period ended? No. That means this amount of March is still owed by us. Okay, we have not yet paid the amount of rent here. So whenever we have owed, where do we write down? We write down here. So here we write down balance, what? CD. What is the amount of rent? Rent for 1 month. For 1 month it is $500. So we write it as $500. Total both the sides. 4 plus 2, 6. This will be your $7,000. This is going to be your $7,000. Here the amount of rates that is going to be transferred is $6,000. Go to the income statement. Rent. Okay, income statement. This will be on 31st of March 2009. Okay, so here we have got one balance. Okay, the balance is what? The balance is credit balance. Okay, all right. So this is not matter of concern. This is simple rent account that we know how to prepare. We are going to talk about combined expense account. No worries. Again, next you see rates. Right, rates, we have written the amount of rates that has been prepaid. Yes, $300 for 1 month written. Now rates for how many months? 13 months has been paid on 1 June. So simply write down 1 June 2008. Here we write down bank. What is the amount? 3900. Yes, so it is how many months? It is for 13 months. Now when we talk about rates, okay, the accounting period has become very much patchy here. Let me draw once more. This is 2008. Okay, I have drawn the accounting period. See, rates of 1 month had already been paid previously. That means April had already been paid. Now if the rates is paid for 13 months, then this is month 1, 2, this is 3, this is 4, this is 5, 6, this is our 7, 8, 9, 10, yes, 11. So here 2 months extra will come. 12 and 13 means what? Here we have April also and we have May also. That means these 2 months rent has been prepaid. And what is the amount for prepaid rates for 2 months? It is going to be $600. Look here, just use your logic. Since it was $300 for 1 month, right? So for 2 months it is $600. Or simply the total amount that was paid for 13 months was 3,900. So for 2 months it is going to be 3,900 divided by 13 into 2. So this gives us how much? $600 as prepaid. And we know closing prepaid, we write it here. So on 2009, this is March 31st, we are gonna write balance that has been carried down. How much? 600. This is our prepaid rates. Okay, and the rest of the amount will be transferred to the income statement. This is March 31st 2009. Here we write down income statement. Yes, income statement, the amount is 3900 plus 3, this is 4200. This is also 4200 minus 6, it is going to be 3600. Okay, 3600 will be transferred to the income statement. So this is what we would have done if the expenses account were separate. Okay, rent account like this and then rates account in this manner. Okay, so just look here in the solution that is given to us in the next page. See, this is what we are talking in case of combined expense account. Okay, see, this is our balance brought down $300. We have it where in the rates account, balance brought down $300. Okay, thereafter we have balance brought down on the credit side. This is our rent, so rent we have here, credit side balance brought down 1000. Clear? Next you see payments has been made May 1, June 1, December 1. So this is for rent, rates and rent. So see, May 1, June 1 and this is December 1. 3 individual payments but for 2 different accounts, right? Next we have here income statement, right? Here you see we have individual. Rent was $600, $6,000, so rent is $6,000. Rates was $3,600, so rates is what? $3,600. There is nothing extra other than the fact that we just need to combine this portion and the totaling is done togetherly of both these accounts. Okay, now had we made combined expense account directly, I'm going to show you how we prepare it. Okay, so this is your rent and rates account, rent and rates account. So you see it showed on 1st April 2008 Mary had prepaid 1 month's rate, prepaid 1 month's rate. So we know P O O and then what? P. Yes, owing and prepaid, owing and prepaid, both at the beginning as well as the end. Yes, so here Mary had 1 month's rates, that is prepaid. Mary had 1 month's rates, that is prepaid. So prepaid we write it here. This is 2008 April 1. Okay, here we write down balance brought down. So this was what? 1 month's rate $300. Okay, so this was for rates, we write down rates here. Next, and had owed 2 months rent $1000. So same date 2008 April 1. Again balance brought down is how much? $1000, and this $1000 is for rent. Okay, thereafter what are the payments that has been made? Just look into the payments that has been made. So we have the following payments on 1 May. Yes, this is May 1st. So May 1, rent for 8 months has been paid. So simple, bank we write down, but this payment is made for what? Rent. What is the amount? It is $4,000. Thereafter again we have June 1, again we have bank, whereas this payment is for rates. What is the amount? 3900. Thereafter we have 1 December, that is December 1. This is for bank, this is for rent. What is the amount of rent? 2500. Yes, thereafter we have also seen there had been outstanding and prepaid balances of rent and rates. Yes, if you are confused, just look here, this one. Yes, so on 31st of March 2009 we will have an owing balance. This is our balance CD. What is the amount of this balance? The amount of this balance is $500. Yes, $500. And how did it come? It appeared for rent or rates? It had appeared for rent. Yes, whereas on 2009 31st of March we also had a balance that is carried down, whereas this balance is for rates. Yes, What is the amount of balance for rates? It is $600. $600. Now what we do, in individual account we used to add it individually, right? Here, since it is combined expense, we just add all the amount of expenses together and write down income statement here. So on 2009 March 31st, we write down income statement. Find the total amount that is transferred to the income statement. This will be here, and when you do total both the sides, you will find that this side total is how much. Just let me have a quick glance. This is 11200, 11200. This is 11200. If you see the gap, this portion balancing figure, you will find out to be 9600. So here we have 679. Yes, this answer will come as 9600. When you total it, this will be for rent and this will be for rates. When you deduct both of the amount from here, you need to consider all of this. Okay, rates, and then rates, and then is there any amount for rates? No. You'll get the balancing figure as 3600 for rates and $6,000 for rent. 3600 for rates and $6,000 for rent. So 6,000 plus 3600 makes how much? $9,000. So this is what we call combined expense account. Okay, just go through it, practice a few questions. If there is any problem, then we can discuss on it. Okay, so I hope we are clear how we manage combined expenses account.